You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Bitcoin, Ether, Ripple, Litecoin, and more. Cryptocurrencies and other digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity. Provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments on everything from coins to tokens, futures, and even OTC options. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. Now it's time to dive into the exploding world of cryptocurrencies and digital assets. It's time for the Crypto Rundown.
Yes, it is time once again for the Crypto Rundown, the program where we break down everything going on the other side of the fence, the crypto side of the fence. So we're going to talk the derivatives, the futures, the options. Also going to talk some of the spot, as well as, of course, all the fun things going on the volume, the volatility, the SKEW, all of that good stuff. So stay tuned for all of that as we head right on into the Bitcoin breakdown.
It's time to explore the latest trading activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everybody. Welcome to the Bitcoin Breakdown. This is indeed the portion of the program where we break down what the heck is going on in the world of Bitcoin. And, you know, a lot of things are going on in the world of Bitcoin. So let's stay in the spirit of that whole crypto rundown theme. Get you in, get you out, get you updated, get you on your way so you can keep an eye on these crazy markets. And oh, how crazy they are. You know, a week ago, we were hovering just north of the 5,000 level out there in Bitcoin. Everyone was saying, oh my goodness, probably some stronger language there as well. You know, we dipped below 4,000 ever so briefly during the week. What's going to happen? What's going on out there? Can we even rely on these levels? I remember, as Bill put it on our show not too long ago, a lot of you guys echoed this sentiment as well. What a great disappointment it was for a lot of you that Bitcoin didn't perform as most of you hoped and or expected. Maybe not inversely correlated, but at the very least non-correlated, uncorrelated. And yet what we saw was pretty much the old adage playing out in the crypto space as well. When it all hits the fan, correlation goes to 1. And so a lot of you who had diversified or were holding sizable crypto assets as a way to potentially diversify your equity portfolio, not exactly performing the way you might expect. And so coming into this week, lo and behold, seems like, at least for now, the great disappointment perhaps is at an end. As we're looking here right now, Bitcoin at about 6,300, a little bit shy of that, about 6,285. That puts it up a little over 1,200 handles from where it was this time last show. That means over the past week, we've seen it up not quite 30%, about 28% rally. Of course, it's off its recent highs. It got up to about 58 or so over the course of the past week, and dipped as low, got right back below 5,000 again, 49.46. So we had quite the range, about an 1,800 handle range over the past week. Of course, at those current levels, we're still seeing it well off the highs of course, the crazy high of 19,800 back on December 17th. So if you go all the way back to then, It's still off about 68%, but we'll look a little bit more glass half full rather than glass half empty right now as we go on into what's going on. Again, most of these analytics coming at you courtesy of our friends over there at SKEW, SKEW.com. Of course, let's start off in the realized camp, 30-day realized out there. Remember, this frame of reference has moved. It shifts every 30 days, obviously. So that 30 days is now starting to pick up some of the craziness of this downward spiral that began around a month ago, all this corona-induced mayhem we've seen in the marketplace. So this realized vol has ticked up. 30-day realized up to 192%. If you're wondering what's it like over the course of the past year, then it's 89% out there. 30-day implied, same deal. It's actually still frothy, but actually off a little bit, which is kind of interesting. Not quite at 192% in the implied. Again, the implied is the value, the volatility that the options are actually pricing in from a price perspective. That's why they call it implied volatility. And that's actually down a little bit. It was about 168% last show. This week, 131%. And options volume out here on Deribit is also down a little bit, which is kind of interesting because we have seen some decent swings in the underlying Bitcoin. We set a record, remember, back on the 12th of March of about 248, almost 250 million worth of notional. Again, this is not million contracts. This is million worth of notional. That's the biggest day we've seen on record for Deribit. This past week, not quite there. We saw on the 19th and 20th some decent volume, around 70 million notional. Today, pretty light, about 35 million. So we're kind of falling off a little bit again from an overall volume perspective. But the last couple of weeks, though, was lighting it up until about really last week, kind of quieted down a little bit. 70 was about the high we saw over there in terms of notional on a volume perspective. Let's look at what people were trading over the course of the past week. The big prints, these are actually coming out back a little while ago, actually, on the 17th. So St. Patrick's Day was the big volume day out here with the biggest print. Looks like maybe a bit of a roll, time spread / roll here. It was the March 6,000, June 3,500. Looks like a bit of a put spread going up 714 times back on the 17th, so on St. Patrick's Day. If you're wondering, the Bitcoin at the time was at the Bitcoin price level was about 5,300, pretty close to about 5,285 or so. So obviously they had broken through that 6,000 level in March. Probably want to buy themselves a little bit more time. Also taking maybe a put. Again, I don't have sides on this. We're just kind of intuiting from the paper flow here. Looks like probably rolling out to a little bit less meaty strike, shall we say. So going all the way out to 3,500, which may sound crazy, but again, we broke the 4,000 strike not too long ago. So 3,500, maybe perhaps not as nuts as you might think. If you're wondering price levels there, they got 0.186 of a Bitcoin for the 6,000 put in March and 0.1 of a Bitcoin for the 3,500 put in June. Those are some of the biggest prints. The rest were like 100 lots. There was almost a 300 lot as well. Looks like a same day, similar time frame, March 5,000 put going up 286 times against 286 of the June 3,500 puts. So looks like someone had some puts in March that they're deciding to roll out. So it looks like total of nearly 1,000 of these, actually exactly 1,000 if you add them up, of these June 35 puts now going up. So interesting stuff out here. People positioning for perhaps a little bit more downside out here in Bitcoin. The big trades today, again, not a big day out there. The biggest print looks like about 400 of the March 8,000s going up out here this week. Let's look at the SKEW. SKEW is about 2.3%. Remember, this is your traditional 25 delta put, 25 delta call, so your 50 delta risk reversal. It's to about 2.3%. It's down from about 10.5%. Remember, it's kind of a little bit counterintuitive. When it gets positive sign, that shows the puts are leading the dance. When it's negative, it's actually the calls. So you usually expect to see negative SKEW out here in Bitcoin. These days, it's positive because the puts are leading the dance, but not as much. They were 10.5%. Now it's 2.3%. So it shows that Bitcoin, at least on the call side, the call is starting to rear back up. Not surprisingly, we've rallied a bit since our last show. Call the put, though, still in favor of the puts if about 43%. It's down from about 45%. So 43% calls. Obviously, we got the puts leading the dance, 57% out there. So puts still in charge. Let's go out to open interest out here. It kind of spiked about a week or so ago, and now we're seeing a little bit less on the tape right now, but still pretty strong. We're seeing open interest out there. Deribit, the biggest platform, still about 510 million. Again, this is just for the options listeners. BAKKT is bringing up the rear, 41,000. We got CME at about 9.2 million. We've got LedgerX, used to be number 2, now number 3, at 30 million, and OKEX, so the OK Exchange, at number 2, firmly at number 2, with about 47 million in open interest out there. And of course, March is still where the action is from an overall volume perspective, net aggregate open interest. We'll see if that remains the case out there going forward. In terms of the options on CME, bit of a quiet week out there. The recent high we saw from a notional volume perspective was about 2.4 million. That was on February 24th. Came close to that again on the 9th of March, 2.1 million. Nothing recently has really come close to that ever since, though. We saw this past week, today, only about 160,000 worth of notional on the tape, similar levels to yesterday. So not a lot going on the options side. Futures, different story, though, on CME. Decent volume today. Nearly 8,000 contracts on the tape, a little over that by now, actually. Thursday and Friday, we saw both about 18,000. So pretty decent days out there. And then the rest of them, actually about 10,000. Looks like about 10,000 on the 19th and 18th. And then on the 16th, we saw about 16,000 out there. So interesting stuff. BAKKT futures, again, kind of a similar story. Not so much. Talked about how much money they raised recently. Hopefully, they're going to put some of that to work, growing this flow out here. Our old friend, the BAKKT volume bot, saying a total volume about 53 million worth of notional. That's on their monthly futures. And the max open interest, that's actually up, I should say, 14% from last week. But the max open interest is about 6.1 million. That's down 24%. So volume growing, open interest declining, which is kind of interesting out there. Let's kick it up a notch. If we can make it work again, technology always somewhat of a delicate dance here, especially these days with everyone gobbling up the bandwidth. Let's see if we can bring on a little bit of the old crypto hot seat.
Forget about cold storage. It's time to turn up the heat on thought leaders from the world of cryptocurrencies and digital assets. It's time to take their place on the Crypto Hot Seat.
All right, everybody, welcome to the Crypto Hot Seat, the portion of the show where we welcome on guests from throughout the world of crypto trading and indeed beyond to proceed to pick their brains for the benefit of you, the listener. And next up, I do believe he is joining us now. We have Zach ZILIAK, the managing partner over there at ZILIAK Law. Zach, are you with us, sir?
I am, Mark. Thank you very much for having me. I apologized earlier. Clearly, my home office here for the COVID-19 duration needs a little technical work, but I'm glad the cell phone still works.
You know, it's interesting. This show, for some reason, is always beset by the most technical difficulty. I'm not sure why that is. The crypto gods have cursed us. Now, listeners, I can say, wait a minute, a lawyer? What do you do? Why are you bringing a lawyer on? Wait a minute. Zach, not your usual lawyer. It's got a little bit of the old bona fides in the trading world. Zach, why don't you break down your background in the options and derivatives markets for our listeners, as well as what it is you guys do day to day? What do you guys specialize in over there at ZILIAK Law?
You got it. Thank you very much. And again, thanks for having me. So yes, I do come from a trading background. Back in the day, I went to grad school in mathematics. Coming out of that, I was a quant, starting at UBS in their FX exotic space, so work with exotic derivatives. Later switched over to equity derivatives, designing and implementing automated trading strategies, this kind of thing, forecasting volatility and other higher moments of distributions and such. Switched over to head trader for a while at a prop shop, and that's when I did change directions, go to law school, but didn't move that far afield because as a lawyer, I now service people in that same industry. So our business cards still say law for traders from lawyers who trade, and we hire a lot of attorneys who come from the trading background, and we represent a lot of folks in that space. On the crypto side in particular, that means that, yes, we launch crypto funds. We help set up groups that are prop shops on the digital asset side. Then likewise on the retail side, we've helped a lot of companies with money transmitter licenses, money service business registration, broker-dealer registration, this kind of thing, as they try to facilitate retail, crypto-to-crypto and crypto-to-fiat trading. And then back in the heyday of ICOs, we did our share of those, so initial coin offerings, and with all the various alphabet soup as they renamed those, we still helped clients raise money through the crypto markets.
So what was it, would you say, that really was the inflection point for you to say, you know what, I'm going to move on from this market making, this prop trading thing, and I'm going to set my sights over there on the legal side of trading instead? What lured you to the dark side of law, sir? Oh,
this is the hot seat, isn't it? Let's see. So, I mean, I certainly enjoyed and still enjoy the trading side of things. That is, I represent a lot of folks there. I also act as an expert witness on things, reading code and opining on what it does to see if it falls within the rules and this kind of thing. But personally, what can I say? I do like the slightly lesser volatility on this industry than that one. And I also liked how I felt I could do things for more people and sort of give back to society more if I were, helping on the legal side of people who get in trouble rather than getting in trouble myself, let's say.
Well, you mentioned you used to do a lot of ICOs and things like that. Those are probably not the order of the day right now, taking up a lot of your time. But I know you have a big focus on the crypto and indeed the blockchain front. What is the hot thing? What are people beating down your door right now? What are the big legal issues that you're tackling over there on the crypto front right now, sir?
You got it. So we do transactional work as well as litigation. So people who are building things as well as people who are upset about how things are going. On the transactional side, you're right. We do see less money raising by companies issuing tokens now. It still happens. And we still get people asking for, is my token a security or not kind of opinions. But it's moved more in terms of what they come to us for toward the retail side. So registering as money service businesses with FinCEN and obtaining money transmitter licenses from the various states. This enables companies to, whether they set up a storefront, just brick and mortar place where individual, just retail folks can go in and trade fiat to crypto or crypto to crypto, or also online trading of the same. We help companies with that sort of thing. Also, people come to us looking to set up their exchanges. Now, there are a few fully registered groups out there, the LedgerX's of the world and such, who have done their homework and said, we want to register with, depending on the products traded, the CFTC or sometimes the SEC. There are plenty of other folks who are trying to fall outside of those regulations. Sometimes that means leaving the U.S. Sometimes it means restricting what they do. We'll help them with that kind of analysis. Over on the litigation side, a lot of people got in trouble or upset about how things went down in that 2017-ish kind of, again, ICO heyday when it was the Wild West. Not that it's entirely regulated now, but there were a lot of scams out there, and people come to us saying, I put my money in this company, and then they go offshore and disappeared with my cash and never did what they said they'd want to do. Or I was paid to push this token online because I'm an influencer and they never paid me. Or, the regulators are coming after us because we issued a token and we really didn't think it was a security and they say it is, and what do we do about this? So in the early days of this, 2014 and such, we were launching our first crypto funds, I'd say, and we had a steady stream of that. We still do a few of those. But yes, the litigation has picked up as the regulation has gotten stricter. Well,
a lot to unpack there. You mentioned the scam side. Let's maybe start there. A lot of people were hoping that maybe as the markets evolved, as they grew up, became quote unquote big boy markets, that we would move away from the sea of scammers and shady dealings that we saw in some of the early days as crypto was really starting to find its footing as a tradable asset out there. People were coming in, all sorts of various scams, whether it was just straight up hacking in and stealing someone's wallet or trying to use social engineering to steal the codes. And of course, the infamous things like Mt. Gox and others, or people passing away and not having the password to the wallets. All sorts of crazy shenanigans we've seen unfold in the crypto space over the course of the past few years. A lot of people were hoping that the markets were maybe growing beyond that. We don't really report that much on the scams here anymore because it seems like it has lessened a little bit, even though maybe some of the headline-making ones, not so much. But it sounds like from your perspective, Zach, and from what you're working with day-to-day, boots on the ground, the scammers are still fast and furious out there, sir.
Well, let me tell you about that. I think it has decreased a little bit. There's just a lag in litigation. That is, people come to us and say, I got cheated 2 years ago. What are we going to do about this? I do think the markets are maturing. Now, some of those things you talked about are going to stay with us. That is, hackers will hack. What are you going to say? And the social engineering thing is still out there. We might try to have better cybersecurity and such, but that's just an arms race and you want to deal with that kind of thing. I would hope that as the markets mature, you get fewer just pump and dump schemes, fewer issuances that were fake from the get-go, fewer exchanges. I mean, we're not going to have stories of someone potentially faking his death and walking off with all the money in an exchange, and let's say things like this. I hope that we will see less and less of. And yes, then it'll just be that endemic level of, yes, fraud that exists in mature markets too. People try to scam you out of all kinds of things. Now, there's also the tie-in that because of the seeming anonymity, there are scammers from other areas, be it just ransomware and such, who want to get paid in Bitcoin. But I don't blame blockchain for that. That just happens to be the currency they like to take it in. I think the market's getting less scam filled.
And that's a good point about the lag time of litigation. We in the trading community, we're used to executing in microseconds, and so we're used to very, very immediate response. Lag time is not a thing we're used to dealing with. So on the litigation side, it's all about lag. The due process takes quite some time to play out. So the things we're talking about now actually probably occurred months, if not years ago. So I think that's a good point on the litigation front. So those of you who thought maybe we're just up to our knees in scammers, hopefully it's winding down, maybe just getting to that, as Zach referred to it, that endemic, that base level of fraud that's going to exist around any marketplace. You mentioned something else that kind of caught my ear, Zach. These crypto exchanges. You've worked with a lot of them, like LedgerX and others, it sounds like. We've had LedgerX on. We've had most of the venues out there on this program at one time or another. And I'm always fascinated by what the quote-unquote legal definition of an exchange is in the crypto space, because it is miles away from what we would normally assume of it being in a traditional financial market, let it be stocks or futures or options or what have you. In those marketplaces, an exchange is clearly defined by regulation, right? It's essentially a venue where liquidity is provided and aggregated and sourced. That's pretty much it. There's other things they do now. They have technology. They have all sorts of other things that they do, market data. But that's the core function of an exchange. And now what we're seeing on the crypto side are many firms that are calling themselves exchanges because there's no clear definition of it out there. And it sounds cool to be an exchange, but what they really are at the end of the day, they're out there in the customer acquisition business. They're building front ends and helping people to trade and providing access to trading. They're effectively brokers, and yet they're calling themselves exchanges. This has always been a bit of a sore point for me on the crypto space. Is this something that concerns you a little bit as well? And do you see, from your legal perspective, any maybe clarity on this coming anytime soon? Or are we kind of doomed to languish in this morass where anyone can kind of call themselves whatever they want in the crypto space for the foreseeable future, Zach?
Oh, it's a great question. And I do see this kind of, just exactly what you're saying, that people use the word exchange pretty loosely in the crypto space. I think some of that is more like the currency exchange you have down the street. It's not an exchange in the same sense as the CME is an exchange. It doesn't have to have the same kinds of registration. It has different kinds of registration because it's, potentially a money services business. It's moving money around like this. And that's why we do see these sort of small-scale exchanges, if you want to use that term, not registering as proper exchanges with the CFTC or SEC, but rather registering as money services businesses with FinCEN, just to facilitate, again, just on-the-ground retail transaction. You come with $100, you want to walk out with some fraction of a Bitcoin. That kind of thing happens. But then the true exchanges, if they are just trading spot crypto, so no futures, no derivatives, and they avoid security tokens, then they have relatively light regulation, for which reason you see a lot of exchanges, so-called, of that variety. They will trade Bitcoin, just have a server in their basement, and they put a matching engine on that, and they say, here, come trade Bitcoin, Ether, whatever else on my machine. And they can sort of get away with that kind of thing. When they branch into trickier products, be those security tokens or futures and derivatives on the various digital assets out there, then the regulators get serious about this, and very doable. You can register properly as an exchange to cover those kinds of products. I think a lot of people are coming from the ethos of, what is this? It's all distributed. I don't need a rule for this. Each person can launch his or her own node, and there's no central thing to be regulated. But in the view of the regulators, yes, there is. Someone is setting the rules. Someone is defining what's listed there. Someone is hosting the matching engine, or at least setting the procedures for it. And that someone needs to jump through the right hoops with the regulators. Now, I'm speaking that way from a U.S. bias in terms of our United States regulations. I think that's a big part of why you see many of these exchanges set up overseas to avoid those same U.S. regulations, because some jurisdictions are more lenient in what they let people do.
Let's bring up the regulatory side, because obviously it's kind of the counterpoint to everything. Every discussion you have in the crypto side these days comes back to regulation at some point or time here, Zach. And we've had Hester Peirce from the SEC on not too long ago discussing her views on the U.S. regulatory scene. We've had a lot of different players on this program from all over the world discussing their views on the U.S. regulatory scene. It seems like for a lot of the U.S. players, there's a lot of concern that maybe the hand-wringing and the delay in approving new products and getting new rule filings in the crypto space, and certainly, of course, the recent pandemic crisis is not going to help that. All hands on deck for other issues, perhaps not so much on the rule filing and rulemaking sense on the crypto side. So that's not going to help the issue. But there is concern that perhaps the U.S. is falling behind a bit. Perhaps look at a lot of our guests have been from Asia, Australia, very much in the vanguard when it comes to being crypto-friendly. Certainly portions of Europe fall under that category as well. Whereas the U.S., obviously we're a market leader, so it might make a little bit more sense. Just longer time to turn the Titanic around after all. But still, are you concerned as well, Zach, that perhaps we're going to fall behind a little bit on there? Or you think maybe perhaps this is a right amount of due diligence you'd expect from a regulator here?
Well, I tell you, when you say turning the Titanic, certainly this is a big ship in this economy, and so I'm not surprised the U.S. is taking a little longer than some. I hope it's not. We're not heading the same way the Titanic did, but I take your point there. And yes, some other countries have moved ahead of us in that way by having more crypto-friendly, blockchain-friendly legislation and regulation. That said, I think there are benefits to regulation. Now, let me say about that. Regulation is a cost. All think we'd like to have less. But the kinds of regulation we see in the trading industry, whether it is disclosures to investors, a la 1933, just coming out of the Depression, saying we need to be clear about what we're offering here, up to monitoring spoofing and this kind of thing. All kinds of rules and regulations that came to govern the trading space did so for a reason. They addressed real observed problems. And if we skip over that, we're going to see the same kinds of problems in this space as we saw in other areas before. Now, blockchain is a fascinating technology. It has a lot of real-world applications. It just happens that bypassing 87 years' worth of securities regulation is not one of those. And I think, yes, there is work to be done. Yes, I would like to see more crypto companies setting up in the U.S. rather than going far afield. But I don't think the solution is to say free for all, turn off the regulation and people will come here. I think some of the proposed legislation in Congress that would try to clarify crypto, which is an important thing to do, turns into a lot of handouts to people who made a lot of money in crypto earlier on, or folks who want to, again, bypass securities laws, bypass tax laws and such. I think you can provide clarity, remove the uncertainty, and that'll bring people over here without just making a huge handout.
Sounds like one of the hot issues for you guys over there, and indeed for the crypto space in general, has kind of moved on from the frenzy was all about ICOs a little while ago. These days, it seems like the frenzy is all about security tokens. What is a token? How does it qualify? Sounds like you're doing a lot of business in this area right now, Zach. So set us straight. What is the current status of all this brouhaha around security tokens, sir?
All right. So there always have been tokens that were securities. There always have been tokens that were not securities. And I think some people want to make it 100% one or the other. In the early days of ICOs, there was a burgeoning industry. I think to a certain extent, the regulators were asleep at the wheel. They didn't see this coming, and they didn't crack down as they could, as people who were just very into crypto said, we can do this new thing that has the same exact economic effect as a security, but we'll call it not a security and skip all of those, again, decades worth of regulations. Then they got serious about this and started enforcing it. But early on, it was relatively easy to issue things without the SEC cracking down on you. At least they were not actively doing things, it seemed. And lawyers for these companies, I feel a lot of them were complicit in this. There was a burgeoning industry of just writing copy-paste opinions saying, yes, your token is not a security. It is a utility token. Feel free to issue this. You don't have to worry about all those regulations. And some companies, I think, knew better, but were happy to get the opinion. And some companies didn't know better and relied on the advice of their lawyers. But a lot of these were issued in a way that just did not comply with the regulations. Some of that, I think, was innocent. I think it also opened the door to some of the scams we saw back then. And now that the regulators have made clear, here is where we draw the line. These are securities, these are not. And companies are coming to understand that. Lawyers are getting serious about following those rules and explaining those rules. I think it will protect investors, and that means bring more money into the market, build volume, as did the old rules for plain old equities as well. So still, people come to us asking if their tokens are securities, and the answer is usually yes, but not always yes. You can design something so it's not. But usually when people are looking to raise money, what can you say? It's just a different medium in which you store a record of who owns these things, but it doesn't change the economic substance of the deal. So that doesn't change, hence the regulations that govern it.
I'm curious, Zach, and when we see markets like this, not just in the crypto, but in the broad equity markets where things are exploding, volatility is exploding, massive sell-offs, crazy bid-ask spreads, there's some opportunity, also some terror out there. I'm curious, does the old head Matlock trader in you kick in again? Do you say to yourself, oh man, I wish I was back in the markets right now? Or is it the other side? Do you wipe your brow and say, ooh, thank God I'm not out there right now?
Well, I tell you, it would be fun times. I'm not going to deny it. I was a volatility trader back in the day, and so this is a time for volatility, right? Plus, just when this much is happening in the market, there are strategies you can do to make money, as opposed to a market just sits there in the doldrums. What are you going to do with it? That's always been what has drawn people to the crypto side. That is, when other markets had calmed down, crypto still had volatility, so a lot of interesting trading strategies that had perhaps played themselves out in some of the other markets were raring to go in the crypto side. So more power to you, right? And now, yes, for better or for worse, we have over the past couple of weeks seen some insane volatility across any market you name, and crypto definitely included. I'm glad that the past couple of days have shown that the correlation is not one, that it's not entirely lined up with the S&P. I'm glad to see that cryptocurrency can help people diversify if it's not exactly a hedge to other trades. But yes, we are in wild times right now. And sure, there's a lot of fun trading in the wild times. And I can tell you, when it's this wild, the volatility bleeds over to us lawyers as well, because we see decreased interest in the kinds of companies that were a week or two ago saying they wanted to launch things and they came to us for help, are now saying, maybe we'll wait till this blows over a little bit and then we'll talk.
Yeah, that seems like that's a popular course of action. Hard to fault them out there right now. And you're right about the correlation, something we've been talking about here. In fact, many of our guests recently on this program in particular have termed it the great disappointment of crypto, in particular Bitcoin. The argument for quite some time now is that if it's not inversely correlated, at the very least it is uncorrelated from the broad equity markets. And of course, over the past few weeks, we saw exactly the opposite. We saw it moving in lockstep pretty much with the broad equity space. So you're right. It's good to see that, at least for the time being, the last few sessions at least, we've seen it breaking that trend. All right, Zach, thanks for joining us on the hot seat, but don't go anywhere yet. Take a beverage, rest your vocal cords. I got to do a little bit of the old altcoin universe. Then we'll come back to answer some listener questions. I think we got a few that might be right up your alley. But right now, we're going to head right on into the altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, everybody, welcome to the altcoin universe, the portion of the program where we break down everything else outside of the number one crypto asset, which is, of course, Bitcoin, except when we talk about the top 10, which we're going to do right now. Remember, take all of these market cap numbers overall with a pretty large grain of salt. There's a lot of fluff in these overall market caps, but the percentages, the ranking should remain pretty much the same. So that's why we look to those more than the overall market caps, even though we will give them to you just for fun. All right, Bitcoin, of course, number one. Market cap getting a little bit better. It was shy of 100 million, not too long, 100 billion, that'd be interesting. 100 billion not too long ago. And now it's back north of that at about 100, almost 115 billion out there. Obviously, the recent rally helping with that. Number two, ETH. ETH also ticking up lately, up to about 14.4 billion. Number three, XRP. Spoiler alert, that one also ticking up this week, up to nearly, not quite 7 billion, about 6.9 billion. Number four, Tether, about 4.6 billion. Number five, Bitcoin Cash, right about 4 billion. Then we fall off a bit from there. Number six, Bitcoin SV, about 3 billion. You got Litecoin, oh, how the mighty have fallen, down to about 2.4 billion. EOS, number eight, a little over 2, about 2.1 billion. And number nine, Binance Coin, about 1.8 billion. round out the top 10, good old Tezos at about 1.1 billion out there. Looking out broad to the altcoin. The number 2 altcoin, obviously out there, number 2 crypto in general is going to be ETH. And it's had a decent week, up to about 18 handles from where it was last show. It was about 112 and change. Last show this week is about 130 and change or so. So a decent little run here for ETH. Let's break down, because there is actually a decent options market obviously out there in ETH land as well. Let's break down a little bit of the analytics out there. Again, courtesy of our friends over there in SKEW land, SKEW.com. 30-day realized, easy for me to say, 30-day realized. Been talking a lot today, listeners. Up to a whopping 249%. That's the actual vol exhibited over the past month in the ETH options market. So that's, I think, fair to say, fairly volatile. That's not implied. That is realized, listeners. 30-day implied, far less, 136% out there. So when the realized is spiking over the implied, you know, something is afoot, something to pay attention to. I think if Zach had his old head trader hat on, he'd be looking at that pretty attentively right now. Let's see, the ADV and the options volume-wise, again, this is over there on Deribit, is actually down a little bit. We saw a good spike of volume a couple weeks ago. This week, not so much. ADV is down to about 3.9 million from about 5 million. And today we're right about in line with that, at about 3.6 million or so on Deribit coming into showtime. Yesterday, a little bit shy of that, about 3.2 million. So overall, we haven't seen the big spikes. Like on the 12th, a couple of weeks ago, we saw a spike to about 12 million notional. That was a pretty active day, pretty much the most active day for a while out there in ETH land. This week, not so much. 30-day SKEW, also something similar to what we saw in Bitcoin. It's up a bit. It was minus 1.8%. Now it's up to about 1.3%. So the put's in charge ever so slightly. The open interest actually down a little bit, ever so slightly as well. It was 43 million not too long ago. Now it's down to about 41 million out there. Ripple, same thing, good old XRP. Had our guest last week from Drawbridge Capital saying they'll even put together a collar and find and source liquidity on options in Ripple. Underlying that is about 15 cents. So if they can find it out there, listeners, that's fairly impressive. Ripple getting a little bit pricier this week, so maybe that'll help their jobs a little bit. Remember, it was threatening 10 cents to the downside. It looked like it was going to trend that way not too long ago. This week, bucking that trend up about 1.3 cents to about 15.6 cents. Still pretty much half of the supposed floor that it had for a long time, around 30 cents, but not quite threatening 10 cents to the downside either. Bitcoin Cash also having a good week, up about 43 handles from this time last show. But I want to get some of you guys on the show as well. You have a lot of questions percolating. Let's get them answered as we head on into your crypto questions.
You've got questions about crypto. Who doesn't? It's time to find out the answers to your crypto questions.
All right, everybody, welcome to the Crypto Questions, a portion of the show where we answer your questions. Sometimes we ask you guys questions as well, like we did last week. This one sent you all into a tizzy, which was kind of interesting and fun to see all at the same time. We asked you, it was kind of a debate point on our show last week. We thought we would put it to you guys as a straight-up poll question. We said, we've seen over 30% intraday swings in Bitcoin and other major cryptocurrencies lately, which has raised the specter, the question of, do we perhaps need circuit breakers out there in the crypto space? And I'll give you the net results first, and we'll get into some of your responses. You guys said no, 60%, 40% to yes. And it was interesting how the responses broke down. A lot of your replies, you could tell where people were coming from. People were coming from the hardcore crypto side, had a very, shall we say, strident response to this poll. Those of you coming more from a marketplace, market-savvy side, a little bit more nuanced on their approaches. Let's have a couple of these responses. Tyler MN saying yes, but the very question flies in the face of the whole idea of cryptocurrency, decentralized, no controlling party. The entire chain would need to agree upon a circuit breaker threshold in real time. Joe having a similar thoughts as a role. The marketplace is handled by the marketplace, or Coinbases and BitMEXs. That's where the circuit breakers could be put in place. Yes, that's what we were talking about. He was on to say the idea of coding some sort of circuit breaker directly into specific cryptocurrency is dumb. That's not what we said. But if you want to interpret that, feel free. I see whack people just said no. Thank you for that. But if you want to vote no, you can just vote no in the poll. But thanks for chiming in. This has been a contentious issue, Zach. So it's kind of good, actually. You're our legal go-to guy here. You're on the show here this week because it's interesting. People who have a markets perspective and I think who want to grow this space beyond the small mom and pop retail, want to get some large institutions at work. They realize 30% intraday swings, probably not a good thing for the reliability of the currency. The people who come at it from a pure crypto, decentralized, quote-unquote, tech anarchist perspective, not exactly liking that idea. Where do you fall on this, Zach? Because you kind of have feet in both worlds there. And do you think this is something that could be reasonably be done in the near future, doing some sort of circuit breaker in the crypto space? Let's just keep it easy. Let's just keep it to Bitcoin for now. Think that's even possible there, Zach?
Sure. So I'm not saying sure it's possible. Some saying sure. It's a good question. And I think you pose it very well that you have in this space of trading crypto, the intersection of two communities. The group who came from the crypto side and eventually needed to trade it, the people who came from trading and said, oh, crypto is a good product like any other. And they have different assumptions going in. Folks who are true believers on the crypto side who say this is, get the man out of my business. We don't need trusted intermediaries. The whole point of this is a trustless this system that proof of work takes care of all of this. They say, why do we need some centralized group that's going to tell us what the rules are? The market will control it. People can trade or not. And this is just perfect price discovery because if it is dropping 30% a day, that's the price that's actually out there. And then you have other folks who come from the trading side who say, we have seen this kind of chaos and this kind of market manipulation and so on before. We have figured out ways to deal with that, to keep volume present because we scare off fewer investors, because we offer them some kind of security that will not be this huge movement and whatever else. We figured out ways to deal with the problems that have come up in the market before, and this is just the next product we can apply those to. Now, it's hard to square those two. People come in with opposite assumptions, and it really comes down to what you personally believe. Now, me, I do come from the trading side, but trading, that is, I came from trading before crypto was a thing, and then I'm a lawyer, and boy, we are by nature biased in favor of regulation. What can I say? Even though, again, I recognize it as a cost and such, I think there are reasons those rules are out there. So I can certainly see why it would be nice if we could snap our fingers and have some kinds of circuit breakers and so on. But I think your guest last week had great points about just, that's hard to do. When there are 20,000 little mom and pop kind of quote-unquote exchanges allowing trades, when you can just reach out to someone OTC and make these kinds of trades, everything else, how do you really implement a circuit breaker? If there were some handful of exchanges that's all there are, you could do this. Or if there was some consortium in which all the exchanges bought in and said, yes, we agree, these are the rules, there you go. But that's not the world we live in. So if I had my druthers, I could see the benefits of it, but I just don't know how we get there from here. How we turn off all of these nodes that are trading independently and switch to that. So I don't know if it's really an achievable question.
Yeah, it certainly is a fascinating one and certainly got people's hackles up, particularly on the crypto side, that we would even dare to broach this subject matter. The notion, you're right, the underlying technology is decentralized and kind of not exactly favorable to some sort of centralization like this. But on the flip side, there's nothing inherently built into, let's say, the underlying mechanics of the SPY ETF, for example, or Apple stock, whatever, that if it falls below a certain percent, that stops trading or halts. No, that's an artificial restriction imposed by a third party, which in this case are the exchanges. And it is easier in the traditional financial sense because we had large Leviathan exchanges like NYSE or CME on the futures and others who can kind of impose these restrictions, and they would be effectively followed. That's where these names are listed, but we don't have the similar thing where these crypto assets are only listed at one venue, and so we don't have a similar type framework. But it does seem like with more people asking us this, it's definitely out there in the weeds. It's definitely trickling up. And if we want to see the size paper that we have on the institutional side in regular financial markets to really grow the crypto space, it does seem like there needs to be some thought process along these lines. Whether it's actually doable, I'm with you. That's a challenge. But it's interesting just to fly off the handle of the notion of the question does not solve the problem. We need to get out there and kind of debate these things more. That's kind of the whole point of a show like this. Speaking of debate and discussion, this next one, again, Zach, good timing. You're on the show this week. We have a lot of legal questions here. This is about someone getting into legal trouble. This comes from OUTONOW. Interesting handle, OUTONOW. Either way, they're asking, do you think the former CEO of BAKKT will be in trouble now for insider trading, and aren't the laws on that different for senators than for us? Of course, he's referring to Kelly Loeffler, who used to be the CEO of BAKKT. She's the wife of Jeff Sprecher, who owns NYSE, or owns ICE, which owns NYSE and a bunch of other exchanges out there, who is now the senator for the state of Georgia. Actually, she just got sworn in a few months ago. And now already, if you've seen Twitter and others out there, there's been a lot of consternation about certain senators, including her, after they got their briefing from the intelligence and indeed the CDC and everyone else on how perhaps extensive this COVID-19 pandemic could be. Immediately turned around. At least it seems like timing-wise, it was the same day in some cases as these briefings, dumped pretty much a lot of their holdings, particularly ones that would be ravaged the worst by COVID-19. At least that's how it appears on the surface. Now, Zach, we talked about this before on our network. Any study you're going to do of who are the best market timers and quote-unquote insider traders, it's going to have senators at the top of the list. They always blow the doors off everybody else. Hedge fund traders, market makers, I don't care who you analyze. Senators always blow the doors off them because, let's say, the rules are a little bit more lax for them. They also have, let's say, access to a lot of information that the rest of the public doesn't have, and also it probably behooves some contributors time and again to leak some information that way as well. It's a lot less traceable than a whole bunch of cash going to a senator. So for a lot of reasons, senators do pretty well when it comes to market timing. But Zach, as our legal representative, I don't want to put words in your mouth. What do you have to say here for our listener who wants to know, what are the laws in this situation when it comes to a senator versus the rest of us Joe Q public, Zach?
Okay, so I agree with you that senators have prime position to learn a lot of what's going on. And we do see with Senators Loeffler, Burr, Feinstein, I forget who else, that there are allegations, suggestions of insider trading or the near equivalent thereof. Certainly, these folks heard about, had access to which direction the whole coronavirus epidemic was going, and not just the fact that it was spreading, but what the U.S. was planning to do, what kind of numbers they were starting to see before probably a lot of people out in the public did. I don't know what all they would have seen because I'm not one of them, but I would have to think they saw as much, if not a lot more, than we did. Now, does that make it illegal? Now, there are all kinds of questions about, this is in a blind trust. It was my husband who made the trade, not me. It was, different senators have different explanations. And there are calls for ethics investigations. That is, some of the senators have put themselves forward and say, yes, I would like the ethics group here on the Hill to look into this, to verify that what they did was okay. Other politicians have said, we think there should be a broader investigation into other senators who are not saying this. And I think you're right that Senator Loeffler is in that category. That I don't think she's come forward and said that she wants an ethics investigation, to my knowledge, but I don't think she opposed it. She sort of can't. With that, would that mature into something beyond just a slap on the wrist internally and some kind of reprimand into some actual prosecution for insider trading? So this goes back to what you said. I'm not familiar with the exact exceptions that apply to members of Congress, but I could look that up, and I would have to think that they have, I can't think of a lot of insider trading prosecutions brought against members of Congress. So I presume from that they have extra leeway. So I doubt we're going to see her up in court as a defendant. But will this remain a talking point for a while? Oh, yes, people are going to talk about it because it looks bad.
Yeah, certainly for a public figure, not the kind of PR. She used to run PR for ICE. In fact, she was sitting not too far away when I had that chat with SEC Commissioner Hester Peirce. She helped arrange that. So she knows her PR. She probably knows this is probably not a good look for a senator who has to go back to re-election, I believe, in November. So a very short interim term here for them. A lot of people have been sending us this, which is kind of like, I guess, like the broad protection people interpret for members of Congress. It goes back to the Constitution. The Constitution says, for any speech or a debate in either house, members of Congress shall not be questioned in any other place. This is kind of broadly deemed as the speech or debate clause, a speech or debate protection, which in the past, there have been some cases that tried to bring these types of cases up against members of Congress, and they've leaned pretty heavily on this speech or debate clause as a way to defend themselves. So that's one of, when you talk about a little bit of wiggling room that the members of Congress have that we don't, they could try to term it that they're engaging in their official legislative acts as a member of Congress, and therefore they can't be subject to regular criminal prosecution. Obviously, there are many loopholes in that. We've seen congressmen and senators be charged with crimes before. And, of course, there's the court of public opinion, which doesn't follow the Constitution. But still, there are some legal wiggle room built in there for members of Congress out there. We could keep going on that. We have a few more questions I want to get to before we wrap up here. Neil L. Another good one for you here, Zach. He wants to know, are you seeing a lot of prop firms entering the crypto market? Zach, when we first started, even before we started doing the show's only been running for a little over a year, but well before this, we saw a huge wave, particularly here in Chicago, of the prop firms and trading firms looking completely just agog at these new markets, or these crypto markets that were effectively falling in their laps. They had decent volume, they had decent volatility, and if you're a derivatives firm, that's all you really need. You can make the rest work on your own. So they jumped into those waters pretty aggressively. The swings we've seen since then have caused some ebb and flow in that migration. I'm curious for you. You deal a lot of the paperwork. You handle a lot of the processes of these firms jumping into the crypto waters. What have you seen on your end? Has it been a bit of a slowdown, or maybe has the recent rally and then sell off and some of the volatility, has that caused an upswing in more funds wanting to get back into the crypto waters, Zach?
Well, certainly there's no dearth of prop activity on the crypto side. The DRWs of the world have staked a claim on that long since. And there are always new folks wanting to get into the market. I will say that when it comes to small startup groups looking to just manage their own money, a small amount, or manage that matter small funds, some of these people who don't have a lot of experience in the market and who just got into crypto trading because they could set up a bot to do this and it, hodl or whatever else, made a lot of money on this. Some of those learn that there's actually more to trading when the market turns down and suddenly they can't just be beta 1 the whole time and hope to make a profit. So yes, when there's downturn, we do see fewer people getting into the market for the first time, but there are enough experienced traders out there who like the volatility in crypto, like the availability of strategies that, again, don't have the same kind of edge in other products that they used to, that even in volatile times like this, we see people interested in this. Now, I think the question about the focus on the question on prop trading is a good one, because we do see more of a downturn in the number of inquiries we get for would-be fund launchers when there is a downturn in the market, because they anticipate that it'll be harder to sell to their investors. But prop is prop. If people are managing their own money and they think they have a strategy, we are continuing to speak with people who yes, want to get into this market, want to trade crypto.
I like it. A little optimistic viewpoint there. Let's wrap it up on this one from Dylan. Dylan wants to know, are you seeing the same liquidity issues in the crypto space that we're seeing in the broad options market? Well, a couple of issues I might take with this question. Liquidity issues in the broad options market. Obviously, we're in a bit of rarefied air now from an overall U.S. options perspective. Right now, we're seeing for the first time ever in the history of the U.S. options market, all of the trading floors are shut down. So this is the first time ever the entire U.S. options market, indeed the stock market now going that way too, the NYSE floor shutting down, is entirely electronic. This is the day many market makers on the floor dreaded decades ago has finally come to pass, not perhaps the circumstances they envisioned it happening in, and probably took a lot longer than many of them thought, but still, CME, floor shuttered, CBOE, floor shuttered, NYSE, floor shuttered, go down the list. No trading floors there. So all electronic markets going to come with some, shall we say, growing pains as you would expect anyway. These are not designed yet for big products like SPX and Eurodollars to handle all of their liquidity on Globex or on the new CBOE platform. So there's still some learning and some growing pains there. That said, the volume has been pretty impressive. I was talking about the numbers on our Option Block show not too long ago, just earlier today, and we were saying how the volume is still holding up there, even though as big names like SPY, for example, we are seeing wider spreads, pretty substantially wider spreads out in these names, and also about an 80% reduction in overall displayed liquidity. And that's not exactly surprising. There's fewer market makers now than there were decades ago. These firms have to be very gun shy, have to be very, very conservative in how they display their quotes right now, because quotes are risk in this environment, not really opportunity. And so, of course, we've seen storied names like Ronin going out of business as of Friday as a storied name in the liquidity providing space. So, and they have very deep bench of expertise in the index options market making in particular. So if firms like that are having issues, and that's not surprising given the fact that we've seen, outside of the last few sessions, we've seen one-directional markets, which is dangerous. One direction over and over and over again for a liquidity provider. And Zach, you remember this from your days out there. One direction over and over again, you can't really get out of the risk you're putting on. You're just putting on more and more risk. So inevitably, if these continue, then it can cause problems. And we are seeing some of that. I think some of the volume numbers we're seeing out of places like Deribit and others are starting to reflect that there's just less volume going up as these markets are widening out. People are a little bit more gun shy about getting things done. So I don't think we're seeing a ton of liquidity problems. I expected a lot more in the broad options market than we are seeing. I've been pleasantly surprised at the overall outcome there. Yes, displayed size less, markets are wider, going to expect that. But the fact that it's all 100% electronic and nothing has blown out yet or have major outages, that's been very impressive. Crypto side, less volume to begin with, less players over there to begin with. So in times like this, that they're going to widen out, we're going to see less volume, perhaps not entirely surprising. So I guess anecdotally we can say yes, even though I think you may be overstating the ones going on in the broad equity option space. Now, who knows? A week from now, if we continue to see one-sided sell-offs in that space and more market-making firms blowing out, then we could have to revisit that conversation. But for now, it seems like, for the most part, we're all quite literally and figuratively surviving out there. All right. Unfortunately, that music means we've come to the end of another epic crypto rundown here. Zach, I want to thank you for joining me in the hot seat and indeed for the crypto questions. And if folks out there have questions of their own, maybe they want to follow up with you, maybe they're just a mom and pop retail trader and they want to ask you questions about their accounts, or maybe they're looking to launch a fund or perhaps get into the prop side of crypto, where should they go? What should they do, Zach?
Well, thank you once again, Mark, very much. And sure, we'd love to hear from them. The website is www.ziliak.com. That's Z as in zebra, ILIAK. My personal email is just my name, Zachary at ZILIAK.com. So ZACHARY at ZILI. I can't speak. ZACHARY at ZILIAK.com. And love to hear from them. We are working remotely right now, but we are definitely working, and there is a lot of upside in the crypto market in terms of launching new things, you're saying, or helping out with people who've already got in trouble with this or that. We'd love to help them all. So please reach out.
There you go. Hit him up, ZILIAKlaw.com, or give him a follow on the old Twitter, as he's just at ZILIAK Law. That's ZILIAK Law. Listeners, on behalf of Zach and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for sending in your questions. Keep them coming, for listening live, all the fun stuff that you do. And we'll see you back here throughout the week. If you're just tuning into this show, you're missing a whole heck of a lot on the rest of the networks. We have great shows coming at you throughout the week. A lot of people need them. A lot of people are concerned about what's going on in these markets, this volatility. We're here for you. And also, a lot of people have a lot of time on their hands because they're home right now. So we got a podcast for that. So if you haven't done so yet, make sure you subscribe to our full network. About a dozen or so shows up there you can learn from and get educated, learn about unusual activity, all the good stuff. Doesn't matter where you are in the option spectrum. We got a program for you. And then we'll see you back here next Monday for more of the Crypto Rundown.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.